Okay, we're back to that conversation around the new market structures for enhanced trading system that the Nigerians wants more liquidity, want more spread for everyone, makes what you call the level playing field for both traders, market participants, and investors. And that's what Robert today, the head of research at AfroInvest, is trying to unpack for us this morning, and what should be your take from that. So let's continue this conversation about the new trading system, the structure. So now we have what you call the imbalance period. The stock exchange on the equity side, restructure a bit of the pre-open period and the pre-close period. What does it look like now? Let's just understand that.
Okay, so what we had before was the pre-open adjust period, between 9:30 and 9.
And 10:15.
Sorry, and
10:15 a.m.
No, before 10:15. That's before the market, eventually opens. A window open for market makers to be able to trade securities. I mean, orders that have been supplied, from the bid side and and the offer side. Yes. So you have that pre-open adjust period when those orders are filled. Now, in the new structure, what you have is 5 minutes before 10. By the way, in the new structure we have now, we have more time for trading, at least by 10 minutes, because in the previous arrangement, what you had was market opening at 10:15, but now market will open at 10. So that imbalance period is now between 9:55 and 10.
Which is now 5 minutes.
Yeah, which is 5 minutes. That's when market makers again are able to do their bid, looking at the offer and the bid size, and try to address if there is any imbalance, in terms of the offer size and the bid size, they are able to play in, and again, the NSE had come up with the rule to ensure that market makers are not just putting only one-way quotes. They are bidding on both sides. So as they are putting in their offer, they are also putting in, a bid.
So that you don't overload.
Yes,
only on one side.
Only on one side. A lot of technicalities are involved in all of this.
I know.
But
yes.
what is most important is what this is going to achieve is, should I say, the much of liquidity, that this new system is going to guarantee, for investors who want to trade, in this.
I'm interested in our viewers understanding the imbalance session at the end of trading, which is about 2:25 p.m. in the afternoon, before the market close.
Yes, so that's around the time when market makers, come into the, before you normally have the, I think it's about 1 minute that we had in the previous arrangement, where market makers can come in towards the end of, close trading. Of the, trading, after all other traders have been shut off, from the market. So you tend to see some sort of volatility towards that end of trade.
Towards the last minute.
Towards that last minute, because market makers, can come in and and do their thing, especially on the the attractive, the blue chip stocks, and these stocks have potential to be able to move the market, significantly.
So sometimes that's why towards the end of trading, we see volume and we see price change.
Exactly. Well, price change is something tied to the volume that is able to
move, put on the table.
That is able to move that price.
Yes.
If we can refresh, you know that with the new pricing methodology, you have up to 3 different levels. Your share price is trading at above 100,000. Sorry, at above 100 naira, over the last 4 to 6, between 4 and the last 6 months, the price can move. I mean, you need a volume of 10,000 units to be able to move it. Again, if it's trading at above 5 naira, but below 100 naira, then you can move it by 50,000 units. Then when it is below 5 naira, you can move it, by 100,000 units. So, so all of these are determined. So between the pre-close or even in the pre-open period, and even up until the time market finally closes, these volumes, play. This pricing methodology for determining where prices go up or down. The volume, will play very significant
So
role
the stock
in
exchange,
determining
so
that.
the Nigerian Stock Exchange looked at the pricing methodology of just about 4 months ago or less than 6 months ago. Then say, hold on a second, we need to tweak this structure a little bit because towards the end of the day, we don't have a level playing field. And as you just explained, this was the period, and that to change from June the 2nd, when only the market makers have that window. Now everybody will have an opportunity to see what's going on in those last 5 minutes of trade.
Essentially, that's what's going to happen. And so much that by the close of market that day, every player in the market, whether you're a market maker or you're a trader, you have now opportunity to, enjoy the full length of gains that the market can offer for that day. If it can go as high as 10%,
best execution,
and it can go as low as 10%. So the other way, if it goes the other way too, everybody, like you've mentioned, the NSE, aptly puts it by saying it's going to create a level playing field, and again, it's going to bring transparency in pricing. It's going to help even in price discovery, much more than we've had when the new rules were set out earlier this year. So this is a laudable initiative, and I think is in line with global best practice.
I should think so too, because if we had an extant arrangement in which the market makers are the big boys in the market, technically speaking, they got the liquidity, they got all of that.
Well, it's only that we've not really seen that. Again, no faults of theirs.
Yeah, no, it's not the fault of theirs. We all thought. See, we've been on the market makers issues since the last banking sector meltdown, 2009, 2010. We've been on the issue of the market makers, trying to use them to reflate the market. That was the idea, wasn't it?
Yeah, that was the idea. But again, you can't blame them, like I rightly mentioned, because although they are supposed to be provider of liquidity of last resort, if you can put it that way.
Yes.
But again, most of these makers are also taking, because they are using their funds actually to market make these securities.
I remember back then the market makers were to tie this relationship with the central bank in the manner of speaking. I remember just about 10 years or more ago when we were thinking, let us tie with the central bank. Maybe they will have access. The market makers will have access to some funds